Great talent delivers great outcomes for customers. Now, combination of these, what does it give us? Capabilities, the fact that we do a great job with customers, and the fact that we have great talent, it puts us in a position where we are gaining market share with customers every single week. And we are improving the quality of our customers every single quarter. So, some data points to evidence of this. We now have 31 Fortune 500 companies. A lot of our customers are large companies. 62% of our revenues comes from customers whose revenues are above $5 billion. Solid evidence of improving market share and wallet share within customers. Customers who give us 20 million revenue in a 3-year period has almost doubled from 6 to 11. This likewise has gone from 19 to 29. It means we, couple this with the fact that these are large companies. Companies above $5 billion, there are lots of headroom to grow with them. Right? Now, there is one last factor that drives our growth, which is once we get customers, we are good at mind and growing market share because of capabilities, talent, and outstanding delivery. But outside of this, we have an engine, a highly effective, reliable engine that delivers us new customers every quarter. And this is that delivers either high quality of revenues or high quality of logos for us every quarter.
And the discretionary aspect of the client demand. We have consistently delivered growth which is much faster than the industry growth. And the good news is that our growth rate is accelerating. So if you look into a 9-month period, our growth rate is 13% plus, which is much higher than what we did last year at 7.8%. On the right hand side, you can see the industries that we service. We actually service 6 different industries, and we are not over-indexed to any one particular industry that we service. What it does is, it ensures that we continue to deliver secular growth even when some of these industries themselves go through economic cycles of ups and downs. 45% of our revenues come from industry right now, which are growing at an accelerated pace, so that's a good news for us. If you look into the 2-year CAGR, you will see that every single industry for us delivered double-digit CAGR from the revenue perspective. In terms of our geographical mix, 72% of our revenues come from North America, which is the highest IT services market globally. 22% of our revenues come from Europe, and Europe has been one of the fastest growing region for us in the past few years. 6% of our revenues come from Asia Pacific, and you would see that in the 9-month period, for the changes that we have made in the Asia Pacific region and the investments that we have made in that region, the Asia Pacific as a region has started delivering results, and those are early signs in terms of the results from a growth perspective. Our adjusted profit, both on an EBITDA, operating profit basis, and a net margin perspectives, are actually expanding. So you can see on the chart here, starting from 22 to 9 months period of 24, our margin percentage has gone up every year. What it basically means is that everything that we have tried to do from an operational efficiency perspective, which is with respect to improving our utilization, bringing down our attrition, improving our offshore mix, all of them are yielding results which are getting reflected on these numbers. A growth which is much faster than the industry, the expanding margins basically says in absolute dollars we are adding margins much faster than the revenue. So that's the great news. Now on the cash flow, our cash flow generation is very healthy. And if you look into our cash balance as on 30th of September, we have close to $180 million of cash, completely debt free. The IPO that is there is primarily all OFS. We are not doing any transit because there is no need for cash right now for us from a business perspective. We are highly cash generating unit. Our DSOs are one of the lowest in the industry at 49 days. So to summarize, our revenues are one of the industry leading much faster than the industry growth rate. Our margins are accelerating while we are generating a cash flow which is very, very healthy. With that, we'll open up for questions.